Test your understanding 1. During the lifetime of an entity, accounting produces financial statements in accordance with which basic accounting concept? Accounting period. When information of two different enterprises has been prepared and presented in a similar manner, the information exhibits the characteristic of dash. The answer is none of the above because no relationship shown between those two enterprises. No hint is provided here. A concept that a business enterprise will not be sold or liquidated in the near future is known as going on concern concept. Generally, any business is established with a long-term perspective. The primary qualities that make accounting information useful for decision making are reliability and comparability. Test your understanding too. Recognition of expenses in the same period as associated revenues is called dash concept. Matching concept. Revenues and expenses should be of the same period. The accounting concept that refers to the tendency of accountants to resolve uncertainty and doubt in favor of understating assets and revenues and overstating liabilities and expenses is known as conservatism. Ignore all anticipated or expected benefits and gains and incomes. Record all anticipated or expected expenses and costs and losses. Revenue is generally recognized at the point of sale, denotes the concept of revenue recognition or revenue realization. The dash concept requires that the same accounting method should be used from one accounting period to the next. Consistency. Financial statements should be comparable for decision making. So comparability is best possible with consistency only. The dash concept requires that accounting transactions should be free from the bias of the accountants and others. Objectivity. Complete the following worksheet. If a firm believes that some of its debtors may default, it should act on this by making sure that all possible losses are recorded in the books. This is an example of the dash concept. Conservatism. Ignore all anticipated or expected benefits and gains and incomes. Record all anticipated or expected expenses and costs and losses. The fact that a business is separate and it's distinguishable from its owner is best exemplified by the dash concept. Entity or business entity or economic entity or legal entity. A business is separate and distinguishable from its owner. everything a firm owns. It also owns out to somebody. This coincidence is explained by the dash concept. Duality or dual aspects are balance sheet equation assets equal to liabilities plus capital. Liabilities means external liabilities or resources supplied by external parties. Capital, owner's capital. Business is not a natural person and it cannot act on its own. The resources owned by business are provided by others and other business entities. The dash concept states that if straight line method of depreciation is used in one year, then it should also be used in the next year. Consistency. Financial statement should be comparable for decision making, so comparability is best possible with consistency only. A firm may hold stock which is heavily in demand. Consequently, the market value of the stock may be increased. Normal accounting procedure is to ignore this because of the dash. Conservatism. Ignore all anticipated or expected benefits and gains and then comes. Record all anticipated or expected expenses and costs and losses. If a firm receives an order for goods, it would not be included in the sales figure owing to the dash. Revenue recognition or revenue realization. Receipt of an order for goods is not equal to sale. The management of a firm is remarkably incompetent, but the firm's accountants cannot take this into account while preparing books of accounts because of dash concept. Money measurement. The incompetency of management cannot be measured in monetary units.